Yo, what's good, y'all? This your boy Jay Devar bringing y'all another video, man. And this week's video, I'm actually going to show y'all my current trade idea that I got going on right now in the NASDAQ on the NAS100. It's currently an hourly trade that I have framed out for this week. I'm hoping that it does get tapped into this week, but if not, then we'll wait around to see for next week. But yeah, with that being said, before we get into that, I ask that you guys please subscribe to the video, subscribe to the channel, like the video, and leave a comment in the comment section. You know, if you've been liking my content, also too, if just to make some conversation, etc., or some videos that you would like to see in the future. But yeah, other than that, let's just go ahead and get into the video. So basically right here, as you can see, I have a 1 hour fair value gap marked out right here. I'm gonna go ahead and this text right here. So 1 hour fair value gap. Move it over here. Right, actually gonna put it on top. Gonna make it a little smaller. Yep. Actually, I'm gonna do this white. That's a lot clearer. Yep. Alright, so right here I have this hourly fair value gap right here, or this hourly CB, or sell side imbalance, buy side inefficiency, because in this case, this price action or this impulse move right here formed a fair value gap based off of bearish candles. So that's what classifies it as a sell side imbalance, buy side inefficiency, because prices imbalanced here from a sell side perspective. And so basically, for this inefficiency to be filled, buy side has to come in and basically drive prices up high enough to actually tap into this area and fill in this inefficiency of the price range right here currently on the NASDAQ. So yeah, the fair value gap of the 14,868 and the 14,824 level. Right, that's the current fair value gap that I'm targeting right now. As you see, I have my stop set to right here, set above this high right here, because I honestly don't think. Well, I'm subscribing to the idea of that, like, to fill this inefficiency right here, price shouldn't want to head to this high right here, or this single high right here, and then head higher, because I don't see really any other PD arrays that are resting above here, or resting above this high right here. It's just like some choppy price action right here. As you can see right here, this high that I have marked right here, this is the weekly range high, or last week's candle. That's why I have the date marked out. So like it's the 16th, October 16th through October 20th. So last week's high and last week's low right here. You can already see we ran the low of last week, and we tapped into like some daily sell side liquidity that was resting here, and also in the weekly fair value gap. But this fair value gap, this small little weekly fair value gap, has already been visited one time before. And yeah, you can see right here, this fair value gap has been visited before already. And I honestly think we can really just run down lower and head down into this weekly fair value gap, or this weekly imbalance that's right here. It's not gonna look like it right now, but if I go down to the weekly time frame, you'll see it. As a matter of fact, I'm gonna go ahead and do that right now. Go to the weekly time frame, go up to the weekly time frame. So as you can see, right now, currently I'm working within this weekly range of last week's weekly range. As you can see, I have the high and the low of last week, pointed out of last week's candle right here. And as you can see, this was an impulse candle that basically also created an order block, a weekly order block. I don't have it marked out right now, mainly because I don't want to like put anything else on here to obscure my vision, because I could go ahead and mark it out right here. So you see right here, we have this weekly order block, bearish order block actually. So you see right there, I'm just doing it for educational purposes to show you guys like what I'm looking at and why I'm subscribing to this idea. So right here we have our weekly order block. You can see we have the level marked out right here. I wonder if I could like make it a little clearer. Okay, yeah, that works. So now we're working. Okay, yeah, that works. So right now, currently in the current price action of this week, following last week, right? We've already ran the low of last week. I don't see any reason for us to run the previous week's high because, as I said, right now we have a bearish order block, bearish weekly order block that's resting right here. That was created from this impulse move, this impulse candle from last week, and then on top of that we have a weekly fair value gap right here that I'm looking. This is the area. This is my main area of interest. This is an area that I've been trying to targeting for like the past 2 months, like since August. I've been looking for this area right here to be fully tapped into since August, and as you can see, since then it's taken a while for it to actually get here, right? So since August, I've been looking at this area since August, right? So like late July, early August. As you can see right here, the current price action, we formed an order block. Right here before July ended, right? And then so July 31st, formed the order block. The week of August, it kept continuing down the whole month of August, and then late August, it hit. Price ran back up, tapped into this weekly order block that was formed back in July, and now we see the current price action. And during this time, I don't know why I was anticipating to just completely just run down here off rip. Because like on these higher time frames, you have to subscribe to the idea that like this is gonna take a while. This is gonna take a while, possibly a few weeks out to 2 months. And as you can see, from July to now October, so like July, so like August, September, October, so a total of 3 months, right? A total of 3 months, and we might actually go ahead and see this idea actually pan out. Yeah, and that's honestly what I'm looking forward to, because also too, within this weekly fair value gap, there's also a monthly fair value gap that's resting right here. That's this huge area that you see that I have marked out right here. I'll just show you that level real quick on the monthly time frame. As you can see, we have this large monthly fair value gap right here. We had another one right here, right? But this one right here just had this monthly but this monthly fair value gap right here. It just had this weekly fair value gap that was resting inside of it, and that's why I wanted to subscribe to the idea of this one being tapped into, because this one has like more confluences to if the hedge funds or the banks or the the people in charge of the people who have the most money, like these large hedge funds, if they wanted to bring price down to a level where they wanted to basically take prices higher and run out these highs or run out this monthly high, this would be the area to do it, because there's a lot more discount arrays resting down in here, and also too, this is a deeper discount. Let's see, let me go ahead and mark out. So from this impulse move right here, so this low to this high, right? And that's also why I have it marked as the monthly discount fair value, because our discount levels, anything below the 50% of the retracement right here, the Fibonacci retracement tool, anything below the 50% from this bullish price range or this bullish price run, anything below this is discount. So that's why I have it marked as a monthly discount fair value gap, because everything geared or set to like make price run higher, right? It would happen here and below here. So anywhere like the 618, you have it right at the 50%, or you have it at the 618 or the 70.5. Anything below here, this is deep discount, and honestly, if anything falls below here, well then that will form a bearish breaker block right here. It's a small one, but it will form a breaker block right here, a bearish breaker block right here. If any price action was to head lower and basically run these lows right here, these relative equal lows right here on the monthly time frame, that will form a monthly breaker, and then we would have to look for other discount arrays below that price range or below these lows. And the next one is right here, a monthly fair value gap that was formed back in June 2020. So but that is like so far into the future. We don't even know if price is gonna head this far down and tap into that area. I just had it marked out a couple like last year. So, but yeah, currently where we're sitting at in price action, this is the area right here. This is the discount area that I have marked out right here. This is what I want to see. This is where I want to see price fall down to if we're actually going to subscribe to, say, higher prices. But as far as right now, from a monthly perspective, we're bearish, right? We're bearish right now from a monthly perspective. We're bearish. Also, too, from a weekly perspective, if my chart loads, it's kind of froze. Okay, there we go. Also, too, from a weekly perspective, right now we're bearish. Right, so we're bearish right now from a weekly perspective. We see we have a bearish weekly order block that I have marked out. We also had this large impulse move from last week's price action. So I don't see any reason for us to run out this high, or last week's high right now, until we actually do tap into this area right here. And then we can like look to see, okay, then we can look and see, okay, so well, what exactly is price gonna do when it gets to this area, right? And in the coming weeks, then we can look to see, okay, how is price reacting to tapping into this weekly fair value gap that's resting right here, right? But until then, right now we are subscribing to the idea that we are short, or the best time right now is to be short and looking for short opportunities. So yeah, and also right now, right now, this is a weekly fair value gap, because this candle is for this week, the 23rd of October. Today is the 24th, so Tuesday. So currently right now, right, this is the high for the week. This is the high right here for the week. So in between this high and 2 weeks ago low, right, this is the current weekly fair value gap. Right, and because we already ran the weekly range low from here, I'm thinking, depending on how this week closes out, right? Depending on how this week closes out, I think what I'm gonna anticipate is, depending on how we close right here, right? Say like we close as a small bullish candle right here. I think next week we'll open up, and the weekly expansion would be higher up into this weekly fair value gap, but also up into the hourly fair value gap that I do have marked up here. And this is what I want my actual entry to be, right? So I think we can anticipate a bullish expansion up here, tapping like deep into the fair value gap that's resting right here, and then we can see like price come down and actually tap into this weekly fair value gap that's right here. Because what I'm anticipating is basically we close bullish this week, and then next week we expand higher to run the previous week's high. So this week's high, which would be the previous week's high. So we close this week, next week open up, run this candle's high, and then sell off, and then run this week's low, right? So this is the current price action, or currently what I'm looking at. I'm gonna remove this really quick because I want to mark out this level actually. So we're gonna mark this out right here. So as currently right now, as it stands at the 14,419 level on the NASDAQ, or the NAS100, this currently is our low for this week. This is currently the low for the week. And currently this is the high for the week, right? So I'm just gonna leave that there. But currently this is the week's high. This is this week's high. this week's low currently right here. Sorry, y'all, I'm a bit nervous. I apologize. Also, another thing too of why I'm subscribing to this 1 hour fair value gap being tapped into is because basically from last week's weekly range, you see right here you can't see it clearly, but this red line that I have marked right here, this is equilibrium. This is equilibrium of last week's weekly range. So from the high, from last week's high, oh shit, hold on. So from last week's high, right here, to last week's low, right here. Last week's low right here. Actually, did I do it? Oh, I did it from the open and the close. That's right. I did the equilibrium for the open and close. Well, the equilibrium for the high to low equilibrium is right here at a 14,889 level. Right. That actually does help with my idea actually a bit. Wow. Okay. Because if I do it from the open to the close, then the equilibrium will be right back from the area I moved it from. But doing the high to the low, you get the entire range, right? I think I like this better. I like this better. Yeah, we're gonna do the high and the low. We're gonna do the high and the low. We'll do that. So right here we have the equilibrium of the range, and right now the hourly rests below the equilibrium. So I'm honestly cool with it, say, tapping into this 1 hour level, because from the open and close, oh crap, whoops, I did the wrong thing. Get my retracement tool. So from the open to the close, right there, this is equilibrium. You see, we've already tapped into that based off of the range of the open and the close, and not necessarily the high and the low, right? But from the open and the close, we're already tapped into the equilibrium of the range. Actually, yeah, I'm gonna use this one instead. I'm gonna keep it where I had it before. Okay, so based off of the last week's open and close, this is our equilibrium price point, 14,773. So anything above equilibrium is premium, right? Because we had a bearish sell-off, so now they want to buy it back. So anything above this is considered a premium, right? So this weekly fair value gap, this current weekly fair value gap, and this current 1 hour fair value gap, it's all above the equilibrium of the weekly range is open and close, right? So based off of that, this is an area of premium, right? And when they've bought it back enough, they tend to want to sell off and come down to a lower price area, which would be the weekly fair value gap at this 14,218 level right here. So this is my current trade idea that I have marked out right now. Hopefully I explained it the best that I could. Because also too, we have a daily fair value gap that I have marked out right here also. Right. That I have marked out right here also. So within this daily fair value gap, we also have an hourly fair value gap. Right, and that's the one with the gold rectangle that I have marked out right here. So basically, we have multiple confluences to support my idea of seeing price tap into this area and head lower. Because from a monthly perspective, we're bearish. We're bearish because all of this price action over here indicates that we're in an oversold condition. An overbought condition. My apologies, my bad. All this price action right here suggests that we're in an overbought condition, and when price when the market tends to be overbought, generally you're going to see like a large retracement or a huge retracement back into an area of discount, which would be right here, right? So monthly discount right here. We're overbought on the monthly discount right here, and now we're retracing. So currently as it stands, monthly bearish. Go down to the weekly, bearish. Go down to the daily, right? Go down to the daily, bearish, right? Because over the past couple of days, we've ran these lows. Also too, we formed another order block here, already tapped into that area. So again, I don't see a reason for it to head higher and tap into the order block again, especially when we're so close to this weekly inefficiency right here. That's what I'm anticipating to go on. And also too, so from the 4 hour, I didn't really see any PD arrays. Well, from a 4 hour perspective, right here we have a 4 hour fair value gap right here, but that's already been tapped into, which is why I'm targeting the 1 hour one, because this one has already been tapped into. I think it's gonna be tapping to the high of the 4 hour one, because the high of the 4 hour fair value gap is actually the beginning of the 1 hour fair value gap. And so from a 4 hour perspective, if price does tap into my trade right here, the hourly fair value gap, this is the last line of defense that I'm looking at. I see a 4 hour order block resting right here. So if price does say tap into my 1 hour entry area that I wanna be entered in at, if it does go above the stop, I'm cool with it. This is basically like the last line of defense in the trade management. If it does hit higher and tap into this area right here, we can see lower prices. If it taps into this area, what the hell just happened? But if it taps right here, right, this 4 hour order block right here, I'm going to mark this out. 4 hour bearish order block. So 4 hour bearish order block right here. This is basically the last line of defense for my trade idea. Price comes up, it does go into the stop above the 1 hour fair value gap. We have this 4 hour order block right here. So another confluence of anticipating seeing lower prices. Right? That's what I'm subscribing to. And honestly, I wouldn't mind setting this as maybe a limit order, but then again, well, if I did do that, I would risk a 0.5%. I would risk a 0.5%, not a whole percent. Cause this trade right here, I'm risking 1% on. So if I do another entry, I'm only gonna risk like half of that. And this one will be a return of 1 to 4.5. But we'll see, because I don't want to be too over leveraged or anything in too many trades. So we'll see. I'll come to that conclusion later on. But as far as right now, also too, you can see today for Tuesday, we actually tapped into the buy side liquidity that was resting right here on the 1 hour time frame. Right here, you see these relative equal lows right here. So not relative equal lows, but these relative equal highs right here. We have the 1 hour buy side liquidity that's resting right here. These highs were formed last Friday, right? And from what I learned about from ICT is that smooth edges love to be made jagged. So that's why I had this area marked out. This also too is another confluence to my idea of, seeing lower prices, because above the buy side liquidity on the 1 hour, we also have the 1 hour fair value gap. And if we want to see lower prices, based off of the ICT teachings, we want to see a price run above a liquidity pool and into an inefficiency, which is resting right here. Also, there's another inefficiency right here, the 4 hour order block, the 4 hour bearish order block that I just marked out earlier. But yeah, so basically all these confluences right here are basically why I'm looking to subscribe to lower prices, especially at this area. And as you can see today on Tuesday, I actually did try to scalp this a little bit, and I'm gonna be honest, scalping is not my best suit. Scalping is not my best suit. I don't know what it is. I just can't do it. Just seeing like I try, and just seeing like the rapid price action, it kind of like just makes me really anxious. So honestly, I may just step away from scalping for a bit and just practice it a bit more. But who knows? It's still so early in my trading development. I'm still learning and getting better and learning from my mistakes. And honestly too, probably just understanding that like with scalping, you're probably gonna have a lower win rate with scalps because your stop losses are so much smaller and it tends to be more rapid price movement. But so as far as right now for Tuesday, we already tapped into the 1 hour buy side liquidity, but I want to see like a bigger run above it, because right now they just tapped into the liquidity pool and now price is just heading lower into another 1 hour fair value gap, which is resting right here. So right here, this is a BISI, a buy side imbalance, sell side inefficiency, because this is a fair value gap that was formed from bullish price action right here. So you see price action right here from bullish price action. So we have a buy side inefficiency, sell side imbalance. No, buy side imbalance, sell side inefficiency. Right. So right now, what I'm subscribing to right now, what I'm looking to see happen, if not today, but Wednesday's trading, we trade into this area right here, and then we push and hit higher into the 1 hour fair value gap that's resting right here, right? And then that's my actual entry. That's my actual trade idea right here. And matter of fact, this actually could be a good trade idea. I don't know if I'm probably not gonna do it. Yeah, I'm probably not gonna do it because my stop loss would have to be right here. Take profit right here into that area. I'm not exactly sold on that, but I'm cool with just waiting, right? So with that being said, y'all, like that's my current trade idea that I have for the NASDAQ. As far as right now, from what I see this week, everything should pan out to say activate the trade this week. If not this week, then next week. And then from there, I'll just be managing the trade to see if it actually does tap into this weekly level that I have marked out right here at the 14,218 level right here. So with that being said, I hope y'all enjoyed the video. Also too, subscribe to the channel, like the video, and leave a comment down below if I actually helped anybody or some things I can improve on. So yeah, with that being said, y'all have a good day, man, and I'll see y'all